Hey, what's up? And thanks for checking out our market update for Monday, May 15th. Happy Monday. So we had last week's CPI that didn't really come through like we expected initially. And, we talked about it last week of why we weren't going to see those same numbers. And here's the good thing. I think we were really prepared for the worst, but it wasn't so bad. If you kind of take a look at the breakdown of the CPI from April here, there are some things to be happy about. Let's bring up the data real quick. So what we can see here is that shelter costs have not only, crested, so to speak, but they've started to actually come down, which is huge. And they haven't made any, rapid descents, but we've got a good trend going here. And I think this is the first thing that makes me a little more optimistic for where rates should be in the next couple months and kind of throughout the summer. So it does look like there's some good things on the horizon. The big wild card that I'm a little concerned about and want to keep my eyes on are used car sales. Month over month from March to April, used car sales went up significantly, and that was a big headwind for us kind of coming into the April CPI, and part of the reason we didn't get the numbers we were looking for. JP Morgan really had good insight, so did Goldman, as to how these numbers were going to look. And right now, I'm hearing mixed things about whether or not this is going to change, and this was just a blip. And some people think it's here to stay, and having more to do with where the economy is, and that people aren't buying as many used cars. And we'll see how it shakes out. There's a lot of conflicting data out there, and honestly, it's hard to make heads or tails out of it. But at the end of the day, this is one piece we will be keeping an eye on, is where used car sales kind of end up. That said, because it's kind of a slow news week, we're not really projecting a lot of movement. We do have a 20-year bond auction on Wednesday that may move markets one way or the other. But when you have a slow news week, it's really going to come down to the technicals, meaning what the charts show, where are our foundations of strength and where are our ceilings of resistance. So if we take a look at the bond chart right now and kind of show where mortgage bonds are, if you take a look here, you see we're sitting just below a lot of resistance in the form of the 25, 50, 100, and 200 day moving averages. They're all right above our heads. And without a lot of data to move markets this week, it's going to be concerning to see where we end up. Unfortunately, there is a lot of room to the downside. So I'm hoping maybe that 20-year auction goes well, and just general economic news puts us a little bit above these lines, so we can use them as a foundation rather than see them as a ceiling or resistance. We're just going to have to see how the week goes and kind of hope for the best, but kind of treading cautiously here. And speaking of used cars or just automobiles in general, we've seen both payments and costs of automobiles just shoot way up in the last few years. And just a bit of advice for anybody who's thinking about buying a home: check where that home payment, where your car payment is at, if you have one. And if you don't have one right now, consider maybe pushing that beater a little bit longer if you can, because car payments have been a really big factor in what some people are going to qualify for, as far as your buying power. I'll show you an example of what I'm talking about. Take a look at this quick chart. I'm comparing two buyers against each other. Both buyers have the same credit score. They're both putting 5% down. They're both first-time home buyers, and they both make a little bit over $80,000 a year. And they both have $300 a month in minimum payments on their credit card, student loan, whatever they have. But one of them has an $800 a month car payment, and the other one doesn't. And look at the difference in buying power these two buyers have. And look up, you're talking about $100,000 difference, give or take. And these aren't meant to be exact. It depends on the taxes, the insurance, and a few other things. But this can make a monster difference in what you're pre-approved for. So, I'm not giving you financial advice to say, hey, go buy this car, don't buy that car, buy this. But just bear in mind that a big car payment can really be a big impedance in determining what you're going to qualify as far as your buying power. So hope that's helpful. If you need anything, feel free to reach out anytime. This is my contact information. If you want to follow me for more mortgage tips, these are my socials. And I hope you have a great week. Take care.